Hey guys, Sean here. The definition of recession is two consecutive quarters of negative GDP growth. We had negative 1.6% in Q1 and we just got an update on Q2. It is minus 0.9%. The United States economy is officially in a recession and there are no two ways about it. Definitions exist for a reason. It gives people a concrete set of rules in a world full of opinions. That is why it is downright irresponsible and laughable to redefine what a recession is. That is kicking the can down the road, and that is leading people down the garden path that ends in flames. To many of us, we all knew a recession was coming. A blind monkey could have seen it, the signs were clear as day, but somehow many economists, big banks, and market analysts still forecasted a positive Q2 number. To them, the economy was strong, it was robust, and we are on firm ground until everything collapsed when the official numbers came out. Suddenly, we are on quicksand. I want us to take a look at the Atlanta Fed's GDP Now estimate. Even they forecasted negative GDP growth for Q2, and it's very puzzling why the experts couldn't. That is why going forward, we need to be skeptical about opinions, official statements, and rely more on the hard numbers to guide us forward. But what really is concerning is how the White House and the Treasury are both trying to redefine what a recession is. Just days ago, we had Janet Yellen going around denying that a recession is coming, and we had Joe Biden also telling everyone that we are not in a recession. We are really in Twilight Zone territory here, and you really can't make this stuff up. My greatest concern now is that it's getting harder to trust any statements going forward, and doing our own research has never been more important. I believe that the Fed has officially lost control of the situation and the narrative. They are becoming more clueless as the days go by, and they might truly be at a loss on what to do next. But for you and me, we need to prepare. It doesn't matter if you're rich or poor, a business owner or employee, an investor or speculator, because things are going to be very wild, and we need to treat this as a true recession. We have to believe the hardcore numbers, plan ahead, and act accordingly. We now have an economy that is officially contracting. Inflation is at least 9.1%, and very soon you'll see more numbers that underline the true state of the economy. Now, if we take a look at the markets, we can see that perception control is still very strong. The S&P 500 is up, and even gold is up, and this bullish sentiment tells me that investors believe that everything is okay even if we are in a stagflation. Remember, a recession plus high inflation is stagflation. That is another definition we can't run away from. And now we have headlines such as GDP fell 0.9% in the second quarter, the second straight decline, and a strong recession signal. This isn't a signal, guys. This is the textbook definition of a technical recession. And now, because of this stagflation hell, the Federal Reserve is now at a crossroads. They have to make a decision of whether they want to tackle inflation or solve the recession, because at this point, it's near impossible to solve both at the same time. Now, if the Fed chooses door A and they want to crush inflation, they have to destroy demand. They have to continue hiking rates. They have to sell off their assets. They need to suck money out of the economy because they can only actively control the demand side of the equation. They are not masters of the universe. You can't magically boost the supply of oil and food. And this means we'll hit deeper and deeper into recession. That means every asset will likely crash, stocks will crash, commodities will crash, real estate will crash, because everyone will be poorer and unemployment will also go up. Now, if the Fed decides to walk through door B and rescue the economy, they will have to slash rates, print money, inflict high inflation on everyone. How long will it last? We don't know. It could be 1 year or 5 years. It's impossible to guess. But this is a lose-lose situation that we need to prepare for, because you'll be affected one way or another. Either your investments will soar to the moon, but your business or job is affected, or your net worth plunges to hell, but at least you are still employed. So which path is the Fed going to choose? Now, the market rally is telling us that people believe the Fed is going to ease sooner or later. They are going to save the economy and cut rates. However, the other option of demand destruction is also equally possible, because some of the data shows the economy still has some life left. But let's look at the hard numbers and see how strong or weak the US economy really is. Because if there are still signs of strength, then the Fed has more room to collapse the economy to destroy demand to fight inflation. Right now, Biden is still denying a recession, saying job growth is still strong, unemployment is down, and you know what? He's right. Taking a look at unemployment numbers, we are at 3.6% unemployment, lower than the 2001 and '08 recessions. However, unemployment is a lagging indicator. They tell us what the economy was doing in the past, not today. If we take a look at previous recessions, unemployment numbers started out at record low numbers before skyrocketing up when they finally priced in reality. The reality of the contraction and companies deciding to eventually share jobs. And it's gonna start slow. First, it'll be hiring freezes, then it'll be laying off workers. Right now, it's already happening across many sectors. In tech, we have Shopify cutting jobs and Apple slowing down hiring. Plus, Wall Street might be laying off tons of workers in the months to come. So, this low unemployment story might be changing very soon. But I want us to focus more on consumer sentiment and consumer spending because that is the true driver of the economy. 70% of GDP comes from consumer spending, and if that drops enough, this could plunge the economy back into the dark ages. Then maybe it'll be declared as an official recession. Now, what truly worries me is consumer sentiment. What people are thinking about the economy, because thoughts affect action, and what consumers are feeling is a leading indicator of what household consumption will be in the next 6 to 12 months. First, we need to talk about the Consumer Sentiment Index. This tells us what people are feeling about their own finances and personal circumstances, not about the economy per se, but about themselves. The Consumer Sentiment Index from the University of Michigan paints a very bleak picture. We hadn't had such low consumer sentiment since '08, and there's still more room to fall even lower. A true bottom isn't found until we are deep in a recession. Next, let's look at the US Consumer Confidence Index. Now, this is different. This is a measure of the entire economy as a whole that includes the economy's current and future business conditions as well as employment situation. And we can see things have started to fall like a rock since the start of 2022, and it's getting even worse. We are seeing month-on-month declines. Many consumers are feeling negative about the economy and their job situation as a whole. But there's so much more room for it to fall as well. It is still higher than '08 levels and even 2020. Now, the devil is in the details, and if we take a look at expectations, which makes up 60% of this index, we can see it is much lower than the present situation. People are feeling okay right now, but they are much more negative about the next 6 months leading up to Christmas. So people aren't feeling too good about the economy right now, and they believe things are going to get worse in the next 6 months. And this coincides with what big names and CEOs are saying. We have Michael Burry, the famous big short investor, predicting consumers running out of savings between September and December this year. Then there's Jamie Dimon of JP Morgan saying there's only 6 to 9 months of spending power left, and a renowned economist saying savings will dry up by Christmas. And if this comes true, we can expect company earnings, especially retail, to plummet. And we need to watch the advanced retail sales carefully because if this starts to plateau or drop in November or December when holiday spending is traditionally strong, this will be bad. It will signal that savings are really getting depleted and a deeper recession is on the cards. Now, I hate to be Dr. Doom, but we are moving towards a pivot point. If the Fed doesn't act soon, we will continue to have high persistent inflation. If they hike rates even further, they will send us spiraling into a deeper recession. They are caught. Right now, some indicators are still looking good, such as unemployment, so the Fed still has some excuse to hike rates or sell off their balance sheet. But if they wait until December and if the economic numbers are horrible, if sales are down and unemployment goes up, the Fed has an impossible choice then. Do they continue the inflation fight and ignore the public outcry of job losses? Or do they cut rates and reinflate the economy with funny money again? Are they going to act now and crush inflation while there's still time, or adopt a wait-and-see approach until there's no other option but to act? Now, the market rally tells us that people are optimistic. They believe the Fed will get inflation under control and the rate hikes are going to recede sooner or later. But is this really the case? Now, the next catalysts are the Q3 and the Q4 earnings when all will be revealed. Q2 earnings for companies, many of them miss a lot of the estimates. And for Q3, it's anyone's guess what it will be. I'm very wary of listening to analysts hyping up estimates after what just happened with the GDP numbers, and I'm hedging my bets. Now, if it turns out positive and headline inflation starts to come down, we could see a temporary pause or slowdown of the rate hikes and the markets will rally. But what if earnings miss estimates again and inflation is still 7, 8 or 9%? Will the Fed start to ease or hike? And this is how perplexing and broken today's economy is. The only true way to solve stagflation is to increase productivity and the supply of commodities that we need. We are talking about oil and gas and food, but there isn't a magical solution to that. It will take a very long time to bring back supply. And that is why if you're completely betting on the Fed hiking rates to the moon, you can get wrecked. They might actually capitulate and ease. And the converse is true, right? If economic signals are strong enough, Powell might do a Paul Volcker. He might crush inflation once and for all with further rate hikes, collapsing all asset prices. It is literally impossible to predict what will happen next. And let's circle this back to us and what we have to do. We need to play defensively and aim to survive for the next 6 to 18 months. There are so many unknowns right now, plus the war in Ukraine could just escalate and get out of control tomorrow. So really go through your finances and start preparing for both an inflation hell and a deflationary crash. It's a coin flip, and only God can predict whether it's heads or tails. Firstly, let's decrease the amount of debt we have, especially floating rate loans. The Fed has already hiked rates by 75 basis points in July and will likely hike another 25 or maybe 50 basis points in September and October, right? After all, according to officials, we aren't in a recession yet, right? Now, according to Janet Yellen, the economy is in a state of transition, not recession. Transitioning to what? Hell? Are we transitioning all the way to hell? And that is why we need to prepare. Now, secondly, you want to save more and save aggressively and stack cash, because I hold stocks, I hold gold as well, but I also hold cash. And there is a chance that the Fed could really stop the hikes and start easing, so I'm covered on that front. But having additional cash on the side is also a smart idea if they decide to collapse the markets. Now, what if the market collapses another 10 or 20% from where we are? What if it collapses by 30%? Do you have the capital to swoop in like an eagle and grab deals on the cheap? Because if further rate hikes are coming, and I believe quite a bit more are still on the cards, a lot of over-leveraged investors and institutions will be forced to sell their assets at fire sale prices. Money is leaving the system, and it's going to be hard to suddenly raise cash to make the margin calls. So if you can conserve or earn more cash, now is the time to do it. And that is why I'm long stocks, I'm long gold, and I'm long cash, because I have no clue what's coming down the road. But it's going to be shocking either way. It's either purchasing is going to be inflated away, our purchasing power is going to be diluted, or asset prices are going to crash to historic lows, and we need to be prepared for both outcomes. You know, I believe we are in no man's land and investing is now in nightmare mode. The only way forward is to optimize our own balance sheet and ensure we have a strong cash flow coming in and cut expenses. The only thing we can get ahead of the curve is consumer spending. Now, all signs are pointed to consumer spending slowing and company earnings coming down. So there's likely still more downside to go even if the Fed does nothing. And that is why I believe holding some cash is going to be a smart move. And if you're dollar cost averaging, it's always better to buy all the way down and get assets for cheaper than on the way up, right? And it's best we treat this environment like a zombie apocalypse and hunker down while mainstream media is telling us everything is okay, because they have no choice. They don't want the masses to panic, and in that respect, I understand. But you and I, we know better. We know things could get much worse before they get better. It's either an inflation hell or a deflationary crash. And if we are well prepared, we can survive and live to fight another day. And if we are really lucky and really smart with our money, we can walk away richer from this crisis. So let me know what you think. Will the Fed crash the markets or reinflate the economy with easy money all over again? Let me know in the comments below. Stay safe, and if you enjoyed today's video, be sure to smash the like button and subscribe as we navigate through this official recession. Thank you guys for watching, and I'll see you soon.